All right. 3, 2, 1, go.
Here we are.
Here we are back again.
It was a big week.
I got a dog at my feet.
Yeah.
Chewy's
She's
down
there, Chewy.
Our mascot just doesn't like to get on camera.
No. She knows when the cameras are out, actually. It's kind of funny.
It is. She's hiding.
Huge week.
Yeah, man. It's been a crazy week.
Yeah. So.
Let's jump into it.
Well, yeah. Let's just jump into it at first, and then we'll jump out of it for a second.
Okay.
Okay. Big week for the stock funds. On Thursday night, the IBD Market Pulse column went from confirmed downtrend to confirmed uptrend. So either we explained this last week or the week before, I'm not sure, but the formula for Investors Business Daily to move from markets in correction to markets in new uptrend is to see a follow-through day on a major index between day 4 and 10 of a new rally attempt. So in this case, we got a follow-through day on the NASDAQ on Thursday, which was the 8th day since the bottom on October 4th.
You lost me, but that's okay.
All right.
I just look at it on IBD, and it says market uptrend. Yeah. That's all I need to see.
That is all you need to see.
I don't even know why.
Yeah.
It's kind of like our alerts, right? Sometimes I'm
kind of like the alerts.
I don't really need to know why.
It just
tell
comes
me
out.
What to do.
Their formula is very specific, right? It has to be between the 4th day and the 10th day, and the price has to move up at least 1.5%. Has to be one. It's either the Dow, the S&P, or the NASDAQ. It's very specific. If you get a big price move like on the 2nd or 3rd day after a bottom, they'll talk about it.
But it's not going to change.
It doesn't fit in their parameters, right. So that they're not going to change the thing, right? The S&P didn't have enough volume on Thursday to generate that alert, but the NASDAQ did on Thursday. So there's a whole bunch of stuff that goes into it, but it's very narrow. And what they always sort of, what's it called?
Highlight?
I can't remember the term, but whatever, they basically say just because these parameters exist doesn't mean that we're going to get a sustained rally.
Oh, yeah.
What it means is every time these parameters have existed, a sustained rally happened. So every time there was a sustained rally, these parameters existed. But every time these parameters exist does not mean we get a sustained rally.
Exactly.
Does that make sense?
Yes,
okay.
Absolutely.
All right. So I just wanted to update folks on IBD and where we are. If you guys follow that, which I do, obviously, that's a good one. Okay. Okay. So market this week, stock funds are definitely back in rally mode. C fund was up 1.82%, S fund up 2.6%, I fund up 2.56%, and F fund was up 0.39%. So it was a really good week for the stock funds and the F fund on the face of it anyway. All right. So on the show this week, we're going to take a look at a comment that came out on Thursday in the public Facebook group. We're going to talk about that for a little bit, and that's going to actually be a good segue into the big picture of the Elliott wave count. And then we're going to look at the case for a bull market going forward, which would indicate that the 4 wave that we've been talking about here for the last few weeks, that the 4 wave completed this week, and now we're in the 5th leg, the 5 leg being the next up leg. That's the bull case. The bear case is that the 4 leg is still playing out. We have not seen the bottom of the 4 leg yet. That would be the bear case. Bonus chart is going to be sort of a deep dive into this idea of a put-call ratio. It's a really valuable indicator. We're going to take a look at that. And then we'll do the 20-month weekly charts. Okay. So we had this post on the public group in Facebook on Thursday. And I just want to kind of break it down a little bit. It's very common. A lot of people have the same kind of sentiment, and I just want to kind of talk through it. Okay. So the comment of the poster says, so against my better judgment, I pulled out of CNS and put it into the G fund. I figured that it had been too good for too long and had to crash. I'm about 10 weeks into this endeavor, and it's been mostly flat, but the C fund actually gained a little. So now I'm nervous as hell. I don't want to miss out on gains, but I hate to jump back in at a higher price than I sold for. So the $1 million question, is the CNS going to crash soon? So let's just break this thing down into 3 chunks.
This might be $1 billion question.
If you knew the answer, it would be. It could be, a lot of money. So okay, against my better judgment, I pulled out of the CNS and put it into the G. All right, that's the first sentence.
Flag on the play.
Well, I mean, the first sentence of the thing, right? So my question is, if you're reallocating based on your judgment, your gut, your crystal ball, how you feel, whatever.
Water cooler talk.
Yeah.
Unless the water cooler is surrounded by technical analysts, then it's different.
I mean, if you're not using whether it's you're tracking the earnings, you're looking at the technicals, whatever, unless you have a methodology.
Right.
Then you're using your gut, you're using my better judgment, whatever. You're guessing.
Yeah.
All right. So that's the first sentence. I just figured that it had been going too long, too good for too long, and it had to crash. Okay. Yeah, it's the market's been going up. Well, depending on how you look at the time frames, it's been going up since 2009, and it's really been going up since the bottom in COVID in 2020. So it depends on what you think is too long, and eventually, yes, it will crash. Okay, so if you're 10 weeks into this endeavor and it's been mostly flat, but the C fund actually gained a little. So what I'm going to do is go forward here to this chart so we can see where exactly they're talking about. So if the week we're in now, if we count that as week 1, then 2, 3, 4, 5, 6, 7, 8, 9, 10. So somewhere in here is where this person got out of the stock funds into the G fund. And when you look at it on a chart, whether he did it by intuition or luck or whatever, it was a great time to get out. Right? It was around the beginning of August, and the whole month of September. Right? Here's the whole month of September. We had a high at the beginning of September and a low at the end of September. So for whatever reason, if you got out of the stock funds at the beginning of August, you did pretty well. Now we're back. The market's now back up to where it was when you got out, just like it says on the post. Okay. A lot has happened since then. And you don't know that unless you're looking at it on the chart. All right. So let's go back. So he's 10 weeks into it. Yep, the C funds actually gained a little bit. Now I'm nervous. I don't want to miss out on gains, but I hate to jump back in at a price higher than I sold for. So that's something that kind of stuck out to me, right? I say all the time that I want to be on the right side of the trend. And if the trend is up, I want to be in the stock funds. If the trend is down, I want to be in the G fund primarily. Maybe a better way to say it is to be in the stock funds when the market is strong and in the G fund when the market is weak. I'm not sure if that helps, but when strength would mean like when prices are moving higher on big volume, or the breadth is expanding, the number of stocks that are increasing versus the number of stocks that are decreasing on any given day. As the breadth number increases, it's signs of strength. So you want to be in the stock funds, when the trend is going up, but when the market is strong, you want to be in the stock funds. When you have down days and consecutive down days on increasing volume, the market's weak. So you want to be in the G or the F fund, right? The G fund when the market's weak. So maybe that's a different way of thinking about when you want to be in the stock funds. But I don't want to miss out on gains, but I hate to jump back in at a higher price than I sold for. If you're stuck on the idea of getting in at a lower price, getting back in at a higher price than where you sold at, you're never going to be there. What you're saying is you're trying to time the exact bottom and top. You're never going to do it.
You're not going to get back in until it goes down again, and now you're on the downtrend, which is what you jump back into. Right. And I know this is, and I hope those listening are, don't think that we're we know, Jerry and I know, that there are hundreds and hundreds and hundreds and hundreds, if not thousands of people that we worked with in the federal government, and we've been with in the military, that have no idea, have no come from on how to manage a retirement account, how to manage any of this stuff that's related to the stock market. We know that, right? Yeah. So you have to start somewhere.
Yeah.
And we know people are going to come in with, just completely outside of the box kind of thinking because you don't know where to start. Right. And so if hopefully you can listen to what Jerry's talking about right now, and that's where you start from, right? It really is as simple as he kind of lays it out. You can't worry about all these little kind of, I don't know what to call them, but like all these things you hear people talk about.
Yeah.
All these little like things that are just like that are great. They sound great.
Sure.
Right? But they don't really mean anything.
No.
Right? It's like okay, well you have only two choices really, right? You're either in the stock funds or you're out.
Right. That's it.
That's it.
You get 3 stock funds. Yeah. That's it. You're
There's
in the
occasionally a time where you might be in the F fund. Maybe. And we've done it and done well, right? When nothing else was working well. But that's not as common as you're either in the stock funds or you're out of stock funds, right? And so if you have the ability, if you're really knowledgeable, you want to know when to be evenly distributed through those stock funds or in any given one. Now, that's another step, right? But generally speaking, you want to be in the stock funds when it's trending up, when it's strong, and out when it's weak. So timing, the prices, and none of that has to do with it really. It's more about the larger uptrend or downtrend. And so if you play that game only for your entire career, you will win.
Yeah, for sure.
You will grow your thrift savings account year over year over year, and you won't be stressed about, well, did I get 6% this year or 10% or did I get 20%? Is my PIP 50,000%? Right. You won't worry about all that stuff. What you look at is your account, and A, you're putting money into it, hopefully, right? And B, it's growing. Yeah. Because you're on the right side of the market.
Side of the market. Yeah.
That's it. And if you can just wrap your head around that one piece, everything after that is really fine tuning.
Yep. Absolutely true.
Is that?
Yeah. 100%.
Yeah. Because I think too many people want to start fine tuning from the beginning. I know that's what they do, right? Our human nature is to come in and we start turning the dials really. Yep. No. They're big dials. And you turn it slowly.
Yeah.
That's what you do. Right. You turn it slowly because we only got 2 moves a month. We got to have it in by noon. Right. We got all these restrictions. No. These aren't like, this is just big picture stuff.
That's right.
All right.
I mean, we don't talk about that. It seems like we talk about it a lot, but once you figure out which side of the market you're on and all that, the rules, the TSP rules, play a really big piece in this.
Huge piece.
Yeah,
it's what we have to work within. It's the confines. It's if we didn't have those rules, we would be doing a different show.
Oh yeah, it'd be way more fun. I'll tell you that.
Yeah. All right, I'll let you move on.
Yeah.
Where did I leave you at?
Okay. Yeah. No. So I'm on the last sentence here now, right? So the $1 million question is the CNS going to crash soon? Well, honestly, that's not the $1 million question. The $1 million question is, am I on the right side of the market? Because in the long run, that's the question that's going to make you a lot of money. In this case, is the CNS going to crash soon? I actually answered this post, and what I said was kind of glibly, do you watch the show? Because we've been talking for weeks, if not months, about the 4-leg that we're in right now, right? Mm-hmm. And if we're in a 4-leg, it's a corrective leg. And what's coming next is the 5-leg, which goes up from here, is what we're expecting.
Yep.
It's not 100%, but that's what we're expecting. So is the CNS going to crash soon? Again, what does soon mean? I would say no. In the short term, in the next several months, I'm going to say no, because I'm expecting the 5-leg to go higher, right?
Yeah.
So my expectation, my plan A is no, it's not going to crash soon. Could it, quote unquote, crash in the next week to 2? Yes, we're going to get to that because it's the bear.
A short-term trend downward. Yes.
Right. And so if you had been in the CNS funds for the past, I don't know, just say the bottom of COVID, and like this person pointed out, I've been in it for a long time, and it felt like it was going too high, and sometime it had to crash. Yes, it will crash.
Yeah.
How can you gauge when that might happen? Your gut, your intuition, whatever, or you can actually draw some trend lines and have lines in the sand and decide, okay, it's still, the trend lines aren't 100% guaranteed, but if it breaks the down trend line, you get out. If it rolls back higher, you just get back in. You
don't have to be an expert in technical analysis to, at least within the thrift savings plan, because we have all these constriction, it actually kind of makes it easier. Meaning, really just draw your channels, your lines, and say, hey, when it crosses this, I'm out. When it crosses this, I'm in. And you can really just do that alone, and you will do better than most people.
Without a doubt. If you had done that with the 50-day moving average line since the low in COVID, you'd have only moved a small handful of times.
And you'd be fine. But what you'll have to do, though, is you have to tune out all this other chatter. You have to tune out, are we on a green day? Are we on a red day? What?
Right. I don't want to get in lower than what I sold, like all that stuff.
Yeah, you can't. You have to tune that out. Now, when Jerry says, are you watching the show? We're doing all of that analysis. And now when I say we, I mean this guy. All through the week. Unless that's what you enjoy doing, unless you really are interested in learning it, don't take this the wrong way, but just let him do it. and then come watch on the weekends. Nobody else is putting together this kind of analysis that is focused enough for you to apply it to the thrift savings plan. If they are, tell us about it. We want to watch them.
I'd love to see it.
Yeah, I'd love it. But the point is, watch the analysis. If you're a member of ours, Jerry really does some deep dives into the newsletter. And at the end of the day, the bottom line is, you could tap in once a week, right? Make a few adjustments and go about your day and go work and go do, focus on the bigger
do your stuff,
family and not have to obsess over the market every day, unless you want to, unless you really are interested in it. But
all right. So last thing, as you would expect, it shows on the thing here, 57 comments at the time where I cut and pasted this thing out of Facebook, and the comments have only gone up, and I would guess 35 out of those 57 are buy and hold forever people.
Yeah, which always boggles my mind. I mean, we love having you in the group, but it just, if you're a diehard buy and hold person, why are you even talking about it?
What is there to talk about?
Yeah, because if you're just always in,
right,
then what are you talking about? I mean, you're always in. You don't care what the stock market's doing.
Well, I can tell you what's going to happen. The reason.
I can tell you what's going to happen. I'm going to post this show in the comments.
Yeah, right.
That's what I'm going to do.
The reason people are coming out of the buy and hold people come out of the woodwork like that is because buy and hold has been, and the buy the dip mentality, it's all kind of the same thing, has been extremely successful since the bottom of COVID. Mm-hmm. You could argue on a longer term scale, it's been extremely successful since the 2009 low.
Yep.
At some point, the buy and hold people are going to go away because they're going to start losing a bunch of money. And
they won't go away. They'll
stop talking on Facebook.
Yeah.
That's what they'll do.
Yeah. They'll stop talking, or they'll talk louder and expect it to change.
Yeah. If you could chart that, it would be hysterical, because I guarantee you,
I wish
it would
our
be an
show would
elevated
have
wave
been
chart of
around
that.
for that last. I mean, we've been in the government long enough to have seen a few of these. Yeah. And if you think to yourself that never happens, then you just got your head in the sand. It does happen, and we're due for one. We're due for one.
And we've been talking about it, and we're gonna the first chart, the next slide here is going to be that, and so all right. So this is a good kind of lead into it. So if I can do it here, there we go. So this is a 2-year weekly chart of the C fund. So what we're expecting, right? This was wow, IT problems today.
I saw that coming.
This was the bottom of the 4-leg since 2009. Okay, so now we're in the 5th leg of a rally that began in 2009. All right. So we began here at the bottom of the COVID low. It progressed in 5 waves. 1, 2, 3, and now we're in this 4 wave, and we're expecting a 5 wave. Okay, So if we go back to the question, is the CNS going to crash soon? If the bottom is in here at the 4, I have a question mark because I don't know yet. We're going to get into that. If the bottom is in at 4, then the CNS rally into the 5. So if you mean soon, November, December, January, let's say. I mean the timing. I don't do the charts based on timing. So I put this up the 5 up there in that position. It's not relative to anything.
Right.
Okay. So
that doesn't mean it's going to happen on that date. Right.
Right. It has nothing to do.
It's
with
just perspective.
This date.
Yeah, it's perspective to give you some sort of idea that it's going to be up there somewhere.
Yeah, that's all. Okay. So this is essentially the 50-day moving average line. It's the 10-week moving average line, but it corresponds pretty much with the 50-day moving average line. So this week closed just barely above the 50-day moving average line, right? We had a rounded bottom. We had a rounded bottom there. We had a great week this week. We closed a little bit above the 50-day moving average line. We've got 1, 2, 3, 4, 5. Let's call it 5 weeks of correction. So could that be the 4-leg and could it be complete? Yes, it could. And if it is, then we go off. We keep moving higher and we get to the 5. When we get to the top of the 5, that's where you have to worry about, is the CNS going to crash soon? This whole thing can extend and extend and extend. It doesn't mean this 5 is necessarily the end of everything. It can keep going and extend, and the Elliott wave pattern will continue along with it. But the pattern right now shows that right now this is the expected top. And so if that top happens, we could get a correction back down to the prior 4, which is down here. Nobody wants to think about that. We're going to be talking about it probably next year. So that is the crash that you want to avoid. So is the CNS going to crash soon? No, because I would say this time frame right here is soon. Beyond that time frame, it's a better question. All right, so that's the kind of the big picture view of where we are right now. So we're trying to figure out the 4-leg, right? Here's the bullish case for the 4-leg. So this is the chart of the last 6 months of the C fund. Okay, we had the top here at the beginning of September, which is going to be the 3. Okay, we came down in 1, 2, 3. Right? I'm going to get to the Elliott wave piece in a second, but from just the technical analysis piece, we broke down through the 10-day, we broke down through the 50-day, came back up, tested the 10 and 50, couldn't hold above it, broke back down, did a little rounded bottom here, gapped back up above the 10-day, came down, found support, which was a big deal, found support at the 10-day again, and on Thursday blasted off. Right? That's Thursday. And then Friday had another really good day, finished pretty much at the top of the day's trading range, and now we are firmly above the 50-day moving average line again. So no matter how you look at it in the short term, we're above that 50-day moving average line again, which, as we've talked about forever, every time we've hit resistance, every time we've come down and tested support at the 50-day, except for this day, right, we held it. So this goes all the way back to the beginning of 2001, if not earlier. So for a year, that 50-day moving average line held until the middle of September this year, where it failed. So the 50-day moving average line is really important. Right now, it's gone from this very clear, 45-ish degree, 40 degree maybe uptrend to flat to down. So what we want to see happen is the curve of the 50-day start to come back up, and price, every time it tests it just like it did before, tests it, and keeps moving higher. That's what we want to see as we go up into this 5 leg. Okay? That's the technical analysis piece of it. This is really important right here. We had support at the test. We had support when we tested the 10-day moving average line and exploded higher on following that support. That's a huge deal. So again, this is the bullish case, right? So if the 4 is in place, so October 4th was the low, then we came down in A, B, C, which is a corrective pattern, to the 4, to that bottom, and now we should move higher in 1, 2, 3, 4, 5, which will be the first leg of this longer term, bigger 5 leg. Okay? That's the bullish case. Right now it looks pretty strong because we got a 1, and if you did the Fibonacci retracement, which I don't know if we have that on this, but maybe. From the low here at C to this 2, this move is X. This move is 62% of X. So this retracement level is right on for where we want it to be, and it exploded higher from there. So the bullish case again is we come up to a 3, a 4, a 5, and this is either the top or a 1, and then we keep going. All right, that's the bullish case. Here's a target. If we are actually in the 5th leg higher, then what I did here is I took the extension from the 3, this is the 3, right, the top of the 3, to the 4. So I did this extension, so this length times 1.618 is this number up here. So it's a Fibonacci extension. It's a 161.8% extension from the length of this correction. So my first target, if this is 1, 2, 3, 4, 5, that's my first target. Okay. All right. That's my first target, somewhere around 4,700, if the bullish case holds. Okay, what if the bullish case doesn't hold? Here's the bearish case. So we put out this link a ton of time, actually pretty much every show for the past, I don't know, month or two.
And definitely every time you talk about it.
Yeah, it's an Elliott Wave Forecast is a great site, and so tons of great information there. This is what an expanded flat looks like. Okay, it's a corrective pattern, and this is the ideal view of it. So we're up here somewhere. We come down to an A, B, C, which gives us the A. Right? It's a 3 move down, which is corrective. Then we have a 3 move up to the B, which is corrective. Then we have a 5 move down to the C, which finishes lower than the A, and then we move higher. Okay? So this whole thing is one big corrective pattern. All right. So let's go back to what we just looked at. Let's go forward. Okay. So you take a look at that. Basically, we're focusing on this piece right here. So here we are. The 3 is up here somewhere. This is the 3. We came down A, B, C to the A. A, B, C to the A. Okay. Then we go A, B, C to the B. A, B, C to the B. Okay. Then we go 1, 2, 3, 4, 5 down to the C. So this would be 1, 2, 3, 4, 5 down to the C. So the bearish perspective, means that this rally that we've had for the last couple days peters out, and we get a 1, 2, 3, 4, 5 down, and we're back down here to like the 4,200 range, which we've been talking about as part of the zone somewhere in here, where we were looking for the 4-leg to complete. So if we do get an expanded flat pattern, this is how it would likely look. And so how would we know that? We're going to look at the next chart. It's going to be kind of a Fibonacci way of looking at it. But in terms of what we were talking about earlier with strength and weakness, if right now these up days have come on big volume, right? Particularly Thursday, which was what got IBD to change to confirmed uptrend. If these days had come on increasing, or if these increasing price days come on decreasing volume, that's weakness, right? So if there are less people buying into this rally, then it rolls over and we're more likely to get something like this. So we're more likely to have the bear scenario happen. If we keep motoring higher on big volume, then we're more likely to have the bear case happen. So you have to, you don't have to do it, I'm doing it, but you need to look under the hood a little bit and see what is actually generating these price movements. Because that's what's going to tell you whether or not, this B is a B, or is it just a stepping stone to what's going to be a 3, 4, 5, and a 1. All right. So we're still on the bearish case for a second. So here's what I did here. The length from the bottom here to the top of the 1. Okay, I took that length and I moved it over to here. And that length right now is from 43.26 to 44.73. So we're basically right there right now. Okay, this is called parity. We talked about it a few weeks ago when A equals C, right? So here's A, B, C. So if this length equals this length and we stop moving, we go back down. If this length and then we get a 1.618 extension, that's what we want to see. That's the bullish case. We keep going higher. So there's a big question mark right here because we are basically right at the parity level. I don't know which way it's going to go, but it's one of two directions.
What does your gut say?
I don't have a gut.
I couldn't help it.
All right. So last chart of the bearish case, okay? If this is an ABC and we get a 1, 2, 3, 4, 5 down, then all I did was take this move, the correction as it is, and did the 1.618 retracement in the other direction, starting from here, which gets us down to that 4,200 level, which we talked about before. So the numbers all, Fibonacci's work, it all kind of works together. It's certainly, we could absolutely have this. And then what we would have is a big ABC correction, and then we move higher. Mm-hmm. So at the end of the day, this is going to be a corrective move. We're going to get this. I mean, I'm very confident that we're going to get a 5-leg higher. Is this the beginning of it? I don't know. We could definitely still get a move down before we get this. I feel like I'm writing in crayons. Right.
Close.
Okay. So that's it. You either got the bearish or you get the bullish. And
get the bear or the bull.
If you want to know how I'm positioning my funds relative to what I think about the bullish and the bearish case, sign up on the site, growmytsp.com. I'll tell you exactly what I'm doing within my personal TSP account. And
not to do a little marketing plug, but we haven't really pushed this out as hard as we were going to so far, mostly because we've been doing a lot of upgrades to the site, and that's been taking my attention. We also have a great little secret coming out here soon.
Yeah.
I'm working on it tonight. But anyway, the marketing pitch is if you're already a member, this does not apply to you. Don't freak out. But if you're not a member and you're on the fence, this is going to be a time you want to think about getting off the fence, because we're getting ready to raise our rates, raise our subscription rates for the monthly and for the yearly, because we're getting ready to add a bunch of new features. We're getting ready to add a bunch of new stuff. And if you're already a member, great. You just get more stuff for what you're already paying. And so if you lock in the current rate, that's what you pay forever. Yours doesn't raise. So if you wait to jump on board after we raise the rates, well, then you're going to pay the higher rate. And you're going to get the same features, right? You're going to get the same stuff. So we're working really hard to get this all out this month. And at the end of this month, the rates are going to increase. And so we'll be putting out some emails and some social media stuff now that we do have the we've gone to a new server that gets us a lot more stable, and we can handle a lot more things. Anyway, but bottom line is, if you're on the fence, now you might want to think about it. Yeah, and if you're on the fence and you don't know whether we're going bear or bull, or we've lost you, you definitely want to be at least watching this show. At the very least, please watch this show. The show's free, right?
Yeah. Okay. So that's it for sort of the big picture where the C fund and the market in general is going. Okay. Bonus chart, put-call ratio. So put-call ratio is a really valuable tool, right? What it is, a put is a bet that the market is going to go lower, okay? A call is a bet that the market's going to go higher. Looks like Chewy wants to come out and get on camera there. All right. So a put can be thought of in kind of two ways, right? People buy puts even though to protect their long positions. So they're not necessarily betting that the market's going to go down, but if the market goes down, then they have some puts, which means when the price goes down, they make money. So it can be bought as a protection, or it can be bought as an expectation that the market's going to go down, and then your bigger portfolio is betting the negative. So if more people are buying puts than calls, because calls is a bet that the market's going to go up. If more people are buying puts than calls, it means there's a lot of fear out there in the market. And when the put-call ratio gets to be extreme, when there are, the percentage of put buyers versus call buyers get to be extreme, it tends to signify a bottom of the market. It's a contrarian indicator. All right, so here's what it looks like on the C Fund 18-month weekly. Okay, so basically anything above a 1. So anything above a 1, there's a lot of fear in the market. The put-call ratio is high on a relative basis. It's high. Okay. Anything down here below 0.7 on a relative basis, there's a lot of bullishness in the market. So it doesn't work all the time. It's not the only tool you would use to trade on, right? In this particular case, the most recent case here, it kind of worked, right? We poked above 1.0 on the put-call ratio, and it coincided with the bottom that we saw on the foreleg. So it doesn't always work. It signifies bottom. So it also worked back here, right? At this low, we had a major low back here, right before the election in 2020. Back here, we had a lot of people freaking out this week. Put-call ratio is pretty valuable. So if you're not familiar with it, it's pretty easy to kind of chart on stockcharts.com. But the key big takeaway here is when the put-call ratio is above 1, we are likely approaching a bottom in the market. When the put-call ratio is down here below 0.7, we are likely approaching a top in the market. Okay. I mean, in this particular case here, we had this sideways churn for a few weeks. A lot of bullishness here, which ended on that week, and then we had this whole thing. So it's not exact, but again, if the put-call ratio is above 1, you're starting to look for a bottom. If the put call ratio is below 0.7, you're starting to think that the market's overbought. Okay. TSP funds this week. So we already kind of talked about the C fund. This is the 2-year weekly chart. On a weekly basis, things look different than they do on a daily basis, but the blue line is the 10-week moving average line, which corresponds roughly to the 50-day. The 50-week corresponds kind of to the 200-day moving average. We're back up above the 10-week moving average line. We had a rounded bottom. Don't worry about this volume. It hasn't come in yet. It takes a few hours here, and it's Friday afternoon, so we haven't seen the volume for Friday added into that yet. So don't take that as a low volume week. I think this volume is probably going to be at least as high as last week, so it's probably going to be a very bullish volume indicator, especially given the price move that we had this week. Slow stochastic came down almost to that 50 line, which is consistent with where it was on the last lows that we had, which was our 2-leg, right? Remember, this is the 1, 2, 3, 4, and somewhere up here is the 5. So the stochastic got down to where it was down here in the last significant correction, and it's starting to turn back up, right? It's getting ready to cross back up. Relative strength also, same thing. It didn't get quite as low as it did back here, but it's pretty close. So could the 4-leg be completed? Absolutely it could. My plan A actually is that the 4-leg is completed. We got stochastic, looks like it's getting ready to turn positive. We get the relative strength, definitely it's going in the right direction. So on a weekly basis, it's a good time to be back into the stock funds. S fund. This is a great chart. You don't see this kind of long-term consolidation very often. You just don't.
It's just flat forever.
Yeah.
Flat for days.
Yeah.
Or weeks.
There's so much we can talk about this, honestly. JC Peretz, talk about him quite a bit, right? JC talks about how the market topped in February. And if you look at this chart, the top of the S fund, is in February. It's been flat ever since.
Yeah.
The majority of stocks on the NASDAQ and the S&P are down at least 10%, prior to these last couple of days moving up. But the main indexes are being held up by the big tech names.
Mm-hmm.
And if you look at an equal weighted chart, which we did that a few weeks ago, the equal weighted charts, they all look like the S fund. They're all flat. We don't care about that in TSP. We only care about the C fund. What does the C fund do today? Well, and we should care about it because that's what we are actually buying. So we should care about that. But the underlying, what's going on under the hood of all that, it's really interesting if you're a financial geek.
Which we are.
Yeah. But the S fund, I'm not comfortable reallocating to the S fund at this point until it breaks through this channel. I mean, it's got a extremely clear. I mean, you can call this a triangle if you want, but we need to get above this line, right, in a meaningful way
for a good bit. Yeah.
I mean, and what honestly what probably happens is we get above this line, we come back and we retest it, and then we move higher.
Yeah.
I mean, it's going to take some work before I'm really willing to say, okay, the S fund is back in play. And obviously, it means I'm not looking to get in at the bottom of the S fund.
Right.
Right? I'm looking to get in when it's strong.
Yeah, if you pull back, there's no bottom there. That's just flat. So if you're zooming in and trying to figure out when the bottom, it's not, there's too much.
Where are you going to, how are you going to work this chart?
Yeah, you're not using the rules we have, right?
Right. Well, not using the technical analysis rules that we do.
If
and
you're day trading, that's a whole different story.
People make a ton of money on this. You can make a lot of money.
Yeah, if you're day trading that's a great.
It's awesome. Yeah. If we had a daily chart of this, you'd see. I mean, the volatility is huge. You can make a lot of money day trading the S fund.
But we're not.
But you can't day trade the S fund.
You can't day trade the S fund.
Yeah. Now, I mean, if you, in your brokerage account, if you want to day trade the Russell 2000. It's essentially like day trading the S fund. You can do E-minis. You can do all kinds of stuff. Yeah. But in TSP, we can't do it. So there's the S fund. The I fund is similar but different, right? It's been in this relatively long-term corrective pattern, nowhere near as long as the S fund. The problem that I have with the I fund is this big volume decrease during this 4-leg correction on the C fund. We definitely get support here at the 50-week moving average line, which is basically the 200-day moving average line, and then we popped higher this week. Awesome. We need to get above the 10-week moving average line because we hit it, right? The indicators look like they're getting ready to move higher. RSI ticked up this week. Stochastic is thinking about it. We'll see. I'm not convinced. If we are in a 5-leg, then what's going to end up happening is 1, 2, 3, 4, 5. So in retrospect, as we look at this is what we're going to see if in fact the C fund does, or when the C fund does move higher, and we get that completed 5-leg. But right now, until the I fund, I mean, it's not as bad. Excuse me, it's not as bad as the S fund. I mean, you have basically a A, B, C, 4, and then we could get a 1, 2, 3, 4, 5. So the I fund I fund and S fund could break at the same time, and we're back into those funds. But right now I'm not. F fund, I don't know. I should stop doing the F fund chart until it's actually valuable in terms of discussion. I mean, it's only ever valuable when the stock funds are in a downtrend, because that's the only time we're going to be in the F fund.
Yeah, when they're in a downtrend and the
F fund chart looks good.
Is on an uptrend.
Yeah,
not just flat
Yeah.
And there's not enough percentage gain, right?
That's the thing.
Yeah.
Right. If the stock funds are moving higher, and the F fund is moving higher, the stock fund's at least 10x the F fund.
Yep.
So it's not worth it, right? If the F fund chart is strong and the stock funds are decreasing, then you're saying, okay, what do I want to be in the G or the F? Well, if the F is moving up, you definitely want to be in the F because the G is flat always. We know that, right? But this chart is not something I would want to be in, even if the stock funds were going down. I would be in the G fund, absolutely, with this chart.
Mm-hmm.
I mean, we're bottoming out here in the stochastic. That's sort of a positive. Relative strength is pretty much bottoming out. Maybe it's turned up this week, but we're below the 50-week moving average line, obviously below the 10-week moving average line, and you can see the little bit of a wick for the week on Friday. It hit that 50-week moving average line and started reversing from it. So no reason, in my opinion, for a lot of reasons, there's no reason to be in the F fund, if that makes sense. All right.
Bam.
That's it.
Questions. If you guys have questions, you can put them in the comments section, whether you find this on YouTube, Facebook. I think that's the only 2 places it'll be right now.
Right now? Could be all over the internet. We get stuff flying everywhere.
But yeah, if you have questions, send them to us. You can also send them to us at support at growmytsp.com. That goes to our support team, which they'll forward to Jerry if you get a question that's not really, member specific or some issue or whatever. Like if you have a question at all, you can send it to support at growmytsp, and if it's a Jerry question, they'll forward it on. And we obviously don't monitor it 24. We don't monitor it 24/7.
There are a couple questions in there that it's taken me a few days to get back to. So if you're listening to this, I'm there's a couple people that I need to get back to.
Things have been pretty hectic, behind the scenes. So we're working hard at trying to. I mean, most of you that follow us regularly know. We were kind of doing this with Jerry working, and then now he's retired. We're both retired, and so we're all in. And so we're working really hard behind the scenes to just add a lot to this whole thing. A lot of things that people have been asking us for, and so you may not see a lot of it, but we're like ducks on water.
Yeah, right. There's a lot going on underwater.
The
there.
feet are just, but on top of the water, we're trying to be real calm.
Yeah.
All right, guys. Hope you liked the show. Hope you got some good info. Share it with your friends if you did. If you didn't, tell us why you didn't. We'll try to figure
absolutely.
it out. All right. Hope you guys have a great week.
Have a good weekend.
And you had a good weekend. And
cheers.
I think that's the button I'm supposed to push.